All right, looks like a few more have joined, so we'll probably just go ahead and get started because today will be just a lot of talking from me, as it usually always is anyways, but uh, I'm going to be talking a bit more and we're going to be looking at spreadsheets. So we may continue this series the next time, but this may be our last series on subledger reconciliation, and we're going to specifically just talk about liability variances today. It's really dependent on your guys' feedback. I do have to be fairly general, although there are trends of liability variances populate, and what I recommend to do to initially research and start to establish why that variance is populating. And we'll talk about that in detail with a few examples here and then go over those generic examples and potential resolution. But really, if we want to start diving into more software specific ones, because we do have kind of suggestions based off the software that you're operating in, we can't really go into that in something this general where we do have employers here that or service bureaus that are processing in different tax engines. So there may be kind of modification to those general statements there, but I am going to be fairly general today. I did plan on going into the system and showing you subledger reconciliation. About an hour before this call, I broke my sandbox. I know how to fix it. I'm just going to fix it in time for this. So we're basically going to start at, the very end. When I've worked with a lot of you, I always recommend downloading the search ledger. I've done that with some test data, and we're just going to work in spreadsheets today. So if there's any questions about how that corresponds to Finlee functionality, we'll go over that right at the beginning. But basically, this is going to be at the end. When you're looking at the card, you know what company it's related to. So you're going to go to the search ledger and populate that company, download the search ledger, and then use that spreadsheet to start kind of assessing where your variances are. So we're going to start at that point. I thought that was probably the best use of our time today in researching liability variances. I'm sure I've worked with most of you directly on addressing liability variances. So you'll know that I'm like, okay, download the search ledger. I say it, almost every single time we're talking about liability variances. So that's where we're going to pick up today. So really, the topic will be liability variances. I'm sure everyone was anticipating this one because it's been a few sessions that we've been talking about subledger reconciliation. So that will be the entirety of the topic today. And then, of course, if you guys have questions, please put that in the chat or QA. And I believe I allow you to unmute on this one. Feel free to just unmute yourself and ask a direct question as we're going through, just to make sure everything is clear in your mind. If you have suggestions of more specific topics you'd like to go over, as always, we would love to hear your feedback on what you would like me to delve more into on these webinars. So go ahead and put that in the chat or email me directly or support@rakedigital.com at any time talking about that. So we'll go ahead and get started. I did want to review the liability variance slides that I had last time, because it's great to just kind of talk generally about the cause of the subledger rec items, and then specifically liability variances again, just to preface going into, the actual resolution of liability variances. So it's really important to coordinate with you and your team of whoever's running reports or processing tax payments to understand how their general operations impact reconciliation. Especially I don't know if I'm getting a little ahead of myself here, but especially just coming off of quarter end, like let's say that you're running a report parameter to show activity for tax payments being generated, and you're running it on a Monday for a Friday process date. If the tax team during quarter end is in on the weekends and working, the process date could be a weekend date. So you may consider that some of your report parameters could change dependent on operations of tax, of the payroll department, things like that. So kind of looking at your documentation internally, or the processes that you take to run the parameters of the reports, maybe take a critical look at those and see if there's some type of gap. Like if you're seeing consistently some transactions come up on exceptions that should be included in reporting, take a critical look at how you're running your reports and the report parameters of which you're running them. If they're either inconsistent or don't capture all expected activity, then you may need to reconsider how you're running those reports. So just even running report parameters inconsistently obviously will be a general cause of subledger rec items. These are really like low-hanging fruit items that you just want to make sure you're not even worried about in your calculation of subledger rec, so that you don't have to kind of look back at the validity of the reports themselves. Maybe if it's been a while since you've looked at that, maybe take another look at that and solidify that process, as well as like missing reports. So if you're just outright missing a report, let's say that you import on a daily basis ACH files that were remitted to the bank the day prior. If that's another department's responsibility and it's their responsibility then to populate those ACH files in a shared directory where you pull them and then pull them into Finlee by uploading them. If they're not consistently providing you all the ACH reports, and that's really just an internal operational process that needs to be solidified. So that can be a cause of subledger rec items there that can be easily remedied with just maybe an internal check or documents, something like that. I already really kind of pointed to this, but transactions not being included in reports. If there's transactions happening outside consistently of the system, like either your tax processing system or your payroll software, if it's enough of a volume and it impacts like your taxes, something like that, so you always get a liability variance because the wire comes in from the client consistently every 2 weeks, something like that. If we know that it's something that is pretty consistent, it's happening consistently outside of your payroll software, then you do want to either put in a process where you're uploading that when it happens, maybe filling out our import template for our ledger and uploading that when that happens, just to mitigate any timing of and basically incorrect liability variances or subledger rec items. Then like you may want to potentially look if there's reports that you could also include that will help with any of those general causes of subledger rec items. If you have a question on that, feel free to like reach out to support@rakedigital.com and we'd be happy to meet with you and kind of make that assessment with you if you think that there's maybe something missing or lacking within the reports that you're uploading on a daily basis. And all of these really just kind of speak to potentially operational adjustments that need to happen, and really kind of in the context of quarterlies, because we just closed out a quarter, last week or the week before, can't remember. The days are all jumbled in my mind. Like your quarterly processing and the communication between like you and your tax team, if there's a separation there, is really critical during this time. And there may need to be some operational adjustments in how you guys process adjustments, or I don't mean like you have to fundamentally change it, but maybe, there's a spreadsheet that they have adjustments that they put on hold before they determine if they're going to refund the client or collect, or let the agency refund them directly. Having reference to that, or by the type of adjustment that it is, having a certain process that you could then impact the type of reports that you're uploading that will minimize subledger rec items is a worthy conversation to have. And it's kind of a natural progression of subledger reconciliation anyways, that you kind of standardize and look at your operations and determine if there's adjustments that are needed. A lot of the time, clients will come to us asking for those sorts of like suggestions. I just had a conversation yesterday with a client talking about basically operational adjustments that we believe are necessary based on the type of variances that we're getting. So we're absolutely comfortable and willing to have those types of conversations with you, because it's just kind of it's within the natural scope of reconciliation that happens. And addressing those root problems will make reconciliation much easier, subledger rec items less frequent, and over time you'll see like a decrease of subledger rec items. So It's an underlying goal of subledger reconciliation. So I wanted to mention that again, although I mentioned that last time as well. It's a topic worth talking about again. So talking specifically about liability variances, more generally, liability variances, when we're talking about that term, is referencing the tax ledger, and we're balancing the tax ledger maintained within Finlee. We're comparing that to the total outstanding liabilities that are reporting from your tax processing engine or your payroll software if it also has a tax engine built within it. So it's really important on a daily basis, and it's so crucial for client funds reconciliation related to tax to know that the net of everything that is cleared historically for a customer, so all the impounds and payments, the net of that ledger that is left over is enough to cover all future tax liabilities that you're responsible for paying on behalf of that employer. Because when we take on client funds and we say we're going to be the originator of these transactions for you to third-party agencies, to your employees, whatever, we're taking on the responsibility of making sure that we collect and pay out the appropriate amount of money. And with tax funds, that's a unique client funds reconciliation in that you're always likely going to be holding money on your ledger with unremitted tax payments that you're responsible for making in the future. So this is really the critical reconciliation. All of it is critical and builds up to this, but liability variances, I'm going to get off my soapbox here soon, but is really absolutely essential in client funds reconciliation to consider future responsibilities of taxes that you're going to make on behalf of that employer. And I think when people talk about timing issues, that's usually what they're referring to. Oh, eventually in the quarter, we're going to pay that at the end of the quarter. So sometime in, July, it's going to all go to zero. But the problem is that in the month of July, you're processing for the next quarter, and you have liabilities that are going to then be paid out in October, right? So it's so crucial to have that comparison of outstanding liabilities and to make sure that not only your ledger is accurate, but your outstanding liability data is accurate as well. And we're going to talk about that just here in a second. So typical liability variance resolutions, I mean, there's a million possibilities here. I don't like to say it like that, but there's a lot of possibilities, and dependent on the software that you're using, the way that you process payrolls, if you hold any type of collections for a while, especially related to adjustments, there could be a lot of different reasons that the liability variances are coming up. So a lot of corresponding resolutions to that. But what I have found working with a lot of clients over the last couple of years is that generally for your organization, there are trends and probably like a top 3, top 4, top 5 list of why these liability variances in general are happening. So as you work through those, you'll see those trends. And then going back to the operations, if you can make some type of adjustment or don't know what adjustment to make, talk to us and we're willing to help you through that operational change that will eventually resolve that liability variance going forward. Because in a perfect world, we're collecting, we're paying out all the taxes we need to and the frequency that we need to. We know we don't live in a perfect world, but eventually on a daily basis, there should be minimal liability variances that are populating if you're addressing the root causes of those. So just to say that there's a million thousands of millions of reasons that can happen, especially when you introduce human error into that. But there are general resolutions, and I don't mean that to say it's impossible to do this, because the numbers don't lie and they will eventually always work out once you kind of dive in by customer to the ledger to the outstanding liabilities. You'll always find the cause, but just trying to say, okay, you're going to have these 5 reasons that these always happen. I can't say specifically to a set of, 15 different organizations that are potentially on this call because, your operations have a big impact on that. So I'll get off my soapbox there for a second. But the general ways that you resolve liability variances are by balancing your ledger reviewing outstanding liabilities, and reviewing unclear transactions. Those are like the three main points that I always have clients kind of reference first. Let's say you get a variance, you have no idea what the variance could possibly be. Review and balance your ledger, review your outstanding liabilities, and then I usually even just do this first, is review uncleared transactions to ensure that, you know, there's not something excessive on my ledger that's causing the out of balance. And I actually have a specific client example of that. So that will become a little bit more clear as we get to it. So somewhere within your ledger and your liabilities, the two data sets that we're comparing, there's something off on one of them. We have to determine what's off. Then we know, okay, this is causing the out of balance. So, and then we dig in further operationally within your team to say, okay, why did this occur? And can we prevent it again from happening? So I'm going to stop talking super generally about this, and we're going to move into specific spreadsheets here. And everything today is really just going to be within spreadsheets, but these are all corresponding reports that you can run out of Finlee, except for your liabilities, which come from your payroll software or tax processing system. So we have a report called Liability Variance Report. This is the exact same report that you're going to see within the card on the liability variance item once you add it to the Kanban board. I've picked 4 company examples here, and I just kind of pulled this from the report. And this is some test data, but it's kind of based on live data. So but I kind of isolated 4 companies of specific examples that I wanted to go over. So we always start with adding our liability variance. We look at the report, and this report here, either running it from the reports tab or looking at the actual physical card on the Kanban board, you're going to have the same equivalent report here. So let's just make sure that we understand the liability report that we're seeing. It's really kind of made up of 2 separate sections in my mind. We have the ledger side here, which is everything that's contained within Finlee. And then we have the liability side, which the liabilities are being reported from your tax processing system or your payroll software. The total liabilities are made up of 2 amounts here. The liabilities on a daily basis, you're importing your outstanding liabilities because that changes on a daily basis as you're processing payrolls, making tax payments. So that data set simply replaces itself on a daily basis and is really a reference number within Finlee. We have this new column, and some of you, when you started, you probably didn't even have access to this column, or this was something that we just released into Finlee a couple months ago, I believe. We allow you, if your payroll software can't make a meaningful liability adjustment, if you're in Master Tax and you're in iSolved, this really doesn't apply to you. I'm just going to be honest with you. There's some payroll softwares that we work with that it's either almost impossible or impossible to make liability adjustments, meaning like I have a negative payroll that I processed at the end of the quarter, and I can't get rid of that negative liability, even though the overage, I didn't refund to the customer, and the overage is going to go back to the customer directly from the agency. So they're going to have to wait for that. But that rolling negative like won't go away. Master Tax addresses that. iSolved addresses that. A few other softwares that we work with address that. But there's some softwares that we work directly with and we've worked with for a long time that don't give you a meaningful way to address that. So we've allowed you to make permanent liability adjustments within Finlee if necessary. And I always say if necessary, because that is a permanent adjustment unless you completely remove it. But if you have the option to update your tax processing system to reflect accurate liability, do not use the liability adjustment is my very stern recommendation on that. If you have a question of what softwares they are, if you should, feel free to reach out to us. I just don't want to like call out specific softwares on this because I'm not saying it's a necessary limit of the functionality, but yeah, I don't want to get into that specifically. But that's a liability adjustment that's containing within Finlee. That's a permanent adjustment of the total liabilities if you have no other means to do so. So the first set here is everything contained within Finlee. So everything that you see on the search ledger for this customer for the tax ledger, everything that's cleared plus everything that has yet to clear. We'll give you a total overall ledger balance that you're comparing to your outstanding liabilities reporting out of master tax. So I'll go into specific examples, which will give you kind of Excel documents to see right next to each other. That will give you a little bit more clarity, and that's what we're going to do here in the coming minutes. But I always like to look at this report either on the compound card, the card directly, or on this report with a critical eye, because there are trends that you can see that will give you a great hint of what's wrong. So a great example is starting with company 1212 here. It's saying that on my ledger, I have a negative balance, which this is client funds. You never want to be under, right? Like that means you've paid out more than you've collected, or there's some other issue maybe with the ledger. And then I have 0 outstanding liabilities for this customer. So it's very clear to me that there's some issue within the ledger within Finlee. And then I can dive into it even further, saying that there's a pending transaction on the ledger that is exactly equal to our overall variance. For me, that's a strong indication that there's a transaction on the ledger that is uncleared and probably invalid. If the total of that outstanding ledger transaction is exactly totaled and matches our overall variance. So if I voided that, then my ledger would go to 0 and my outstanding liabilities would be 0, and then that customer would be in balance. Now, you should review it. I'm not saying don't review the ledger there, but that's a great indication that there's an issue on the ledger side of this variance, and that's where we're going to start first on the ledger. Like, let's say that that was the opposite scenario and your outstanding liabilities were in the negative, but your ledger within Finlee was 0. I would go first to your outstanding liabilities. So the first look that I take at this report is, okay, what reasonably looks wrong to me? There's some that you really can't tell, like this one here, or these two, like I have a ledger balance, but I also have liability. There's just a difference between the two. So I'm gonna probably have to check both in that case. But here we have a scenario where, hey, I have nothing within our ledger balance within Finlee, but I do have outstanding liabilities. So that tells me that I probably need to look at the outstanding liabilities within your tax processing system, and we'll do this specific examples. I promise we will get to that. And then see if that's something that, okay, maybe I failed to collect conversion collections still, and I need to do that so that I put money onto my ledger within Finlee. So there's a lot visually that this report can tell you if you're used to looking at it. So that's just generally what I look for first is if pending transactions, the total of that match or overall variance, it's likely then I'm going to look at the ledger, and it's likely that there's something that I can void that's potentially invalid, and we'll go over that specific example. And then, if we have an overall 0 ledger balance, maybe there's outstanding liabilities that should be marked as prepaid or held that we're never going to make on behalf of the employer, but they're set in our tax processing system to pay in the future. Or if they're valid to pay, then we failed to collect them so far. So you can get a lot of information just by looking at these. But so I'm going to go over a specific example. I think 1212, and eventually if we have time, we'll go over all of these examples, but we may create this into a part 2 because I babbled for a lot at the beginning, which, I tend to do here on these. So 1212, my indication, like my ledger balance is in the negative. I'm going to go onto the search ledger first. So what I did for this customer, I went onto the search ledger, went to that customer, went to that tax ledger, and then I downloaded the search ledger. Again, I apologize. My sandbox was a little messed up, but I didn't have time to fix it. So I just downloaded the search ledger here, and we're going to take a look. So this is everything that's on the overall ledger for this customer. If I even just wanted to look for that exact amount, let's say that it's a 1-to-1. It could be a net because those are all net. Like let's say that you have 4 transactions that total $2.70 that are outstanding. But sometimes you get lucky, and this is related to one single transaction. So I have an outstanding transaction here, dated 4/23, and it's still uncleared here. So I can go into my tax processing system and see if that $2.70 payment to Utah unemployment dated 4/23 is actually a valid payment to make. So if it hasn't cleared, I just confirm, that it has, it actually hasn't cleared. It cleared later on 7/16, but this is related to the same quarter. So it's potentially that this is on the ledger twice. It doesn't have the same date, which is a little strange, but what I did is, let's say this, I went into my tax processing system. I looked at this account, customer 1212, and I saw for Q1 of 2024 that there was only one payment of Utah unemployment for $2.70. And that I see is clearing on 7/17. But this is indicating that we anticipated on the ledger for it to clear twice, or at least it's outstanding a second time. If you go to your tax team or you're able to see that that is not a valid payment, voiding this transaction in the search ledger is going to get rid of that pending transaction and move that overall ledger balance back down to zero and resolve this item here. So a lot of times, and I'm not saying it's a foolproof method because you do need to validate that it's a valid transaction to void, but if your pending transactions on your ledger exactly match your outstanding variance between your ledger and your outstanding liabilities, then it's absolutely then valid if you've confirmed that's an invalid payment that's recorded on the ledger twice, to void that and your account will go back into balance. So that's a quick one there, and would be a really easy one to resolve the voided transaction. The next time that you kick off find variance or refresh your screen, that's going to resolve and no longer be an outstanding variance because I've corrected my ledger. And let's say I rerun it, that goes back to zero, and then my balance overall is zero because my ledger is now correctly at zero. It doesn't have anything outstanding. We have no future payments that we're making on behalf of this employer at this time, and no outstanding liabilities there. Is there any questions on that in the chat, Brett? Because I've been talking for a while, and I don't know if there's any questions on there about anything that I've gone through.
No, you're good.
Okay. Yeah, that one's a pretty straightforward one, and that would resolve that. Let's go to the next pretty straightforward one where there's outstanding liabilities but no ledger transactions. When I went into the ledger for this company 1582, and again, I apologize, I can't show you within Finlee, but if you go to the search ledger, go to this customer, go to the ledger, then you'll see that there's no activity on this customer at all. So I know that it can't be an issue, or there's nothing on the ledger right now, so I don't have anything to kind of validate and balance there. So I'm going to move on to see what these outstanding liabilities for this customer are. So you would either go into your tax system or look at the most current liability report that you imported. So I'm going to pull up that report. And this is, as you probably guys have seen, if you are in Master Tax, this is like Master Tax test data. So that it's going to look more familiar to you than people that don't use Master Tax. But this is the most recent liability variance report that I imported into Finlee. So I'm trying to see what constitutes the outstanding liabilities of $323.41. So I'm going to pull in this customer code here. So that was customer 1582. And I'm going to see everything that's outstanding here. So we have outstanding liabilities that have a future due date. So 10/31/2024, and period ends, it looks like just through July there. So to me, that indicates, okay, so we have some federal unemployment and Missouri unemployment pending transactions that are due in the future. For me, there's no activity on the ledger yet, so meaning they haven't processed any payrolls, any tax payments, and we have outstanding unemployment. And so to me, this is almost surefire, and you can go to your implementation team or your tax team to confirm that this is a new customer, that we have outstanding liabilities for the payrolls that processed in July, and we need to collect the FUTA and Missouri, I forgot what MO is for a second, Missouri unemployment liability for future quarterlies that you're going to pay on their behalf. So with conversion or implementations that come on, and if you have conversion data like year to dates to process for them, it's likely that you guys are going to take on some of the responsibility of those quarterly payments. So you have to, during that implementation process, or maybe on their first payroll run, make sure that you collect outstanding liability. So for me, this is a valid variance here, and I would note that we need to collect FUTA, like a FUTA quarter two liability. Is it quarter two? Yeah, quarter two, quarter three liability, sorry, for a total of 7244, and then Missouri unemployment for 250.97, totaling the outage that we see 323.41. And until we actually collect that conversion liability and our ledger increases to 323.41, then this will be out of balance. But we do need to track on the Kanban board until you guys do that valid collection, and that the ledger has enough money to cover the future payments that you're going to make the end of October for quarter three FUTA and Missouri conversion collections there. So this is the case where I had to reference our liability report that we're importing on a daily basis, or you can go into your tax processing system. I always like to use the most current liability variance report that you've imported into the system, just because that's the most recent data. So like, let's say that you are reconciling yesterday's data. If they've made tax payments this morning, that's yet to be in Finlee. Sometimes you can see discrepancies between outstanding liability and what the outstanding liability is reporting within Finlee, because just keep in mind, if you're caught up to yesterday's bank reconciliation, that you're importing and you're at a point in time of your outstanding liabilities as of processing as of end of day yesterday. So that's just kind of a side note there. Any questions on that type? Those are usually the most straightforward, but they do occur on most tenants there. So any questions in the chat on those?
Nothing yet, no.
Okay, so let's go over ones. I'm going to remove these. Let's go over ones where, okay, like there's nothing telling me on this report what's instinctually wrong. I have no idea where to start. I always start with the ledger. It's just kind of my preference. I'm already in Finlee, so usually if I have no idea where to start, I start here. I go to the search ledger, I go to that customer, go to the tax ledger, and then I download the tax ledger. So I'm going to pull up the downloaded tax ledger for company 1187. And we have a variance of negative 269.69. So I'm going to see if anything stands out to me. I think as you start doing these more frequently, like, hey, maybe there's like this duplicate payment for 269.69, they're outstanding on the ledger. Maybe there's a one-off added transaction that wasn't valid and shouldn't be on this customer. For me, I see everything that is a source from like normal impounds, normal tax payment processes. I have an adjustment here, but it's for a cent. That's not making up the 269.69. So for me, there's nothing like super obvious that is causing this out of balance. So what I do from there, and what I generally recommend, is starting to balance by quarter. Now, we've talked about quarter in the past. I do recommend, if you have the information in your reports, we do need to do a development request to add quarter instinctually, like so that it reads on the ledger files that you're importing. But it is an incredibly useful tool to balance by quarter to kind of start narrowing down where your variance actually is. So on a quarterly basis, and I know that I kind of talked about quarterlies that you can't balance by that, but after the close of a quarter, if you can total the impounds versus the payments, those should always net to zero. So I always like to kind of drill down into these ledgers and balance by quarter to really get rid of transactions that I know are in balance. So any impounds and payments that are related to that quarter, I make sure that those balance out to zero. This test data already has some quarters indicated here. It doesn't have all of them. I'm going to clear that because the vast majority of your tenants don't have quarter already present there. So let's kind of start from scratch here. So I know that reasonably anything that is dated between like 1/1/2024 and 3/31/2024 is related to Q1, but I also have to take into account any unemployment or quarterly payments that are made at the end of April for that. So when I'm balancing by quarter, and basically what I do is I highlight, I'm sure you guys have seen me do this. I highlight transactions here and I try to estimate, okay, this is through 3/26, and I pull in my quarterly balances here to see if I can get a sum of 0. So I'm still slightly off. It's possible that these transactions on 4/9 are related to the previous quarter. So you kind of have to look at the beginning of the following quarter to see if there's like withholding or something that cleared in the beginning of April that's related to the prior quarter. And then it looks like there are transfers that happened a little bit later in the beginning of April, and payments that are actually related to that first quarter there. So balancing all of these here, including the unemployment that cleared a little bit later in April, and then some things that processed very early in April that were related to quarter one, gives me an overall balancing of 1 cent. We have that 1 cent adjustment, so here we go, we're at 0 there. So that to me is confirming that that quarter is in balance on the ledger. So I can kind of ignore that quarter as far as trying to find the overall variance of the 269.69 that's reporting. So I'm going to go to the next quarter because I'm comfortable with that quarter that's in balance. And then I'm going to pull the unemployment that's processed. And then the things that processed here at the beginning of July, even though that's into the next quarter, it's likely that things clearing that early are collections actually for the end of quarter, quarter two. That sum of that quarter is overall 0 there, so I know that I can ignore that. So it's likely that our variance, well, it's actually true that our variance is in current quarter. So I have an overall ledger balance of 70408, and this is where I'm going to incorporate our liability, like a liability variance report for this customer, and then see what is comprised of our future outstanding liabilities from the liability report that I just used on the other one. So this is for customer. Let me pull that information. Sorry. Customer 1187. And the total of these liabilities are 973.87 with only a total on the ledger of 70408. So if I calculate that, I just pulling that here. And pulling that there, not the most sophisticated way of doing it, but that's where our 269, it is 69, but 70 variance is coming from. So we know that it's contained within these two actual check dates here. So what I like to do for these is usually on your corresponding liability variance report, you have a period end date, or on this one, it could be something else. Not due date. I believe it's period end. Maybe I'm wrong. Okay. Let's see. So I have a July 5th period end date, which is probably associated with that 7/15 collection. It's just pretty much later here. And I have outstanding liabilities of 326 326.64 related to that period of time. So I'm comparing the outstanding liabilities to the net of everything that's related to that individual payroll. So not only like did I balance by quarter, but now that I know that it's probably contained within these two check dates, I'm comparing the impound of the check date, what's already been paid out, which is the federal unemployment. And the difference of that is 326.64 and our outstanding liabilities reported here. just for this payroll is 326.64. So I know that that one is in balance. The net corresponds to, I'm just probably gonna put that in a different one, corresponds to the outstanding liabilities associated with it. So let's move on to the next pay period here. So the next one is probably 7/26 for a 7/19 date. The overall liabilities is 377.44 that's left, and the 377.44 is here as well. So we know that that one is in balance. So that balances to those outstanding liabilities there. But we know that we have other liability that's outstanding that's not contained within our ledger yet. So let me go back, because when I'm doing that period end, I did confirm that both the July 5th and 19th payrolls are in balance, but there are some liabilities related to August 2nd that I do not see any corresponding collection for. So there are California liabilities for California withholding. It looks like for the amount of $269.70, which is a send off of our exact variance. And I don't see any corresponding collection on the ledger for this outstanding liability. So this is when you'd go back to your tax agency and say, okay, we have outstanding liability that we're going to pay out. Let's see what the date is on that. October 31st that we have failed to collect. So there could be a few different reasons why we didn't collect it. Let's say that you ran an off-cycle payroll. You have the collection there, but you wanted to validate first. Maybe that they're in a new state, that maybe you're doing a adjustment of employee wages from one state to another. So you held that collection of 269.70, or that collection didn't generate, or it wasn't successful. That's why it's not on the ledger. So we need to validate, one, that these outstanding liabilities are accurate. So we're going to pay out this 269.70 in the future because our tax system is saying that we are. And if we are, then we need to know why we failed to collect it, or when we are going to collect it in the future there. So this is a case where outstanding liabilities is probably accurate. We have liabilities in the future related to Q3 that are going to be paid out on 10/31 that we have failed to collect. So let's say that this is valid and we just failed to collect it from the client. Once you initiate that collection of 269.70, then you're going to get that, you're going to increase your ledger by 269.70, and then that variance will go away there. So does the comparison, and I know I'm being pretty general here, but does the comparison of the overall ledger balancing by quarter and then kind of diving into each individual payroll when we don't know exactly where the variance is and comparing that to outstanding liability, does that make sense to everyone? Does anyone have any questions on that?
Hey, Aaron, this is Dawn with Payroll Partners.
Hey, Don.
We use that all the time, especially in some of our clients that are further out in lots more states than just California.
Yeah.
But we use the same exact process.
Mhm.
And I believe we've already got our system parsed to come in. And we're actively using Finlee and changing those Q1s, adding Q1, Q2, because then when we export that whole thing, we can immediately say, oh, wait, look, something new popped in. We thought
Yep.
Q2 was balanced and now it's not. So
Right.
we actively, I mean, we go through this exercise that you just did, but then
Mhm.
we're actually making those entries in Finlee for that quarter date. And it's really nice that you can do that in bulk. 'Cause you
Yes.
can
Yes,
group
you
by dates and
can.
do that kind of thing. So
Yep.
it is very helpful for us. And for those of you who don't know, we use MasterTech. So I recognized all of these, but I've worked in other softwares, and the same type of reporting seems to be relatively basic and simple the same way to be able to filter. But we use it all the time.
Yep. And if, I know maybe we talked about it, Don, but if you want to add quarters, so because, some of the master tax reports does indicate period that we can assess quarter on, we could do that through parsing. But that's just a little bit of a development request there, but we can talk about that separately
Right.
too.
Actually, I think we already did that with you. And so the
Oh,
only
did
thing
we?
that catches us is the ACH on
Ah,
like the dates. But I think we've already done parsing, but I'll double check with Rocky
okay.
to be sure.
No, yeah, maybe we have. Sorry if I forgot there. We have done that with a handful there, but yeah, that's a great point. Quarter balancing is I think the key of kind of isolating and kind of diving into it. So if you don't know where to start, balance by quarter, make sure that every quarter you can kind of eliminate quarters. And rather than having to look at each individual payroll of all of these payrolls that have processed on this customer since back at the beginning of the year, I was able to isolate just 2 payrolls that I needed to reference there, rather than, the 15 or whatever it is here. So balancing by quarter and maintaining quarterly dates here, like Don said, you can use the bulk updates to apply quarter once you kind of balance those on the search ledger. That's a great thing to do. And if you're maintaining Subledger rec on a daily basis, just kind of a general thing outside of this, since I'm not in the system at the moment, you can see changes like within the last couple of days that cause that. So any ledger transactions, like let's say that you were balanced 2 days ago and then liability variance comes up, you can look at the recent activity on that ledger and determine if it's recent payrolls. Maybe it's just the payroll that process that is causing your out of balance. So maintaining the Subledger rec items on a daily basis really helps mitigate having to go from the beginning of the account forward. And maybe like Don, you have every single quarter balance, and then you know that there's a new instance of something in quarter one because you're doing an adjustment, and you know that that's what's causing the out of balance there. So if you have no idea and you haven't balanced this customer from the beginning account, or you just want to like make sure that it's not something within a previous quarter, like a prior quarter adjustment that's causing the out of balance, then yeah, it's really important to kind of eliminate quarters that are in balance from your balancing and kind of diving in there. I think that's probably a good place to stop. I know we have about 13 minutes left of this, but I do have one more example, but I wanted to give you all time for a Q&A and probably not exhaust you of going over so much information. I hope that this was helpful for you of like where to start. I mean, if you have no idea where to start, look at your ledger, balance by quarter, and then pull in your outstanding liabilities after that, because it is truly, I know it's very like, it's not a lot easier said than done. And I used to do reconciliation, so I'm not saying that this is easy, but diving into the numbers, there is an out of balance somewhere. It's just about identifying exactly where it's at, and doing that on a quarterly basis and kind of eliminating quarters is my number one recommendation of where to start on liability variances. So I always welcome feedback on this. If you guys want more about ledger reconciliation, I can do a million examples, because there's a million examples of different types of variances, and make sure I cover more of those, but it does follow the same steps. Like you'll see me every single time balancing by quarter and then kind of diving into those, and just making those same first steps to get eventually to the out of balance that is being caused. So we're always open to sitting with you and doing subledger reconciliation or liability variances if you have any questions at all about it. We really are committed to making sure that we're available to you all to help you get over those roadblocks, because if there is some type of variance that you cannot figure out, it's just really typically going to compound, and it could be related or happening on other customers as well. So we do want to help you get to the bottom of those variances, because these numbers are pretty relentless and don't lie, right? That there's something either on the ledger or outstanding liability that's incorrect that needs to be rectified. So I hope this was a good overview, at least a refresher on liability variances for you all. If you have any suggestions or questions after this, please feel free to reach out, and I will hang on here for a couple minutes after this call, just in case anyone has any specific feedback or comments. So thanks so much for your guys' time today. I really appreciate you guys hopping on, and we will see you guys next time. Thanks so much. Thanks, Autumn. Thanks, Emily. Thanks, Jolene. Thanks, Susan. Thanks, Tara. Nice to see you. Thanks, Lisa.